Alright guys, what a 24 hours we've had. This is, I mean, I woke up pretty surprised by the the hawkishness of the Fed meeting, and just more than even the market's interpretation of it. Look, there's still many ways in which the Fed's not going to raise in December, but regardless of how you feel about it, you got to play price action, right? And the market was obviously in the reversal sort of mood there, and you got dollar yen breaking 112, euro reversing off 120, Aussie dollar reversing off 81. So there was actually a spike higher, right, at the start after the announcement, and then the market did reverse pretty aggressively, and continued to reverse with Yellen. Now, in terms of what's happened since then, in the Asian session, everything was pretty. The trades that we took were short euro pound, short euro Aussie, and so they were fine until about halfway through the Asian session, when the governor of the Reserve Bank of Australia spoke. And the whole trade about the Australian dollar is that the recovery in commodity prices from China, and the risk on appetite, and just generally Canada going, and market at some point starting to price in the RBA going early. That was squashed by the RBA governor. Okay, what you got there was a very, very sort of multiple times he was like, well, we're not raising anytime soon. There's we don't think inflation is going to get 2.5%. Australian dollar rising complicates rebalancing. Things like this, right? That but the thing that really hit the Aussie hard was, I mean, it was already in a little bit of a reversal pattern if you look on the daily, and so this is dangerous, right? When you get these two sort of candles like this. But then you had sort of the the trigger point there, which is that this they're not going to be raising anytime soon, and sort of the market was caught a little off guard by that, because you didn't really even open the door, you just shut the door on this idea, and with the market a little bit positioned long, as you've been grinding higher in past couple of weeks, it's well, I mean, well supported on dips for months, but this particular time here you started to see just fairly relentless buying on dips. The market was caught a little bit long here. Now this is really dangerous price action, and if you get it coming across on all the commodity currencies, and you're getting it coming on the Canadian dollar at the moment, then this could lead to at least a 1 or 2 day clean out of the Aussie dollar. Back to 78.50, even back to 77.50 is not that big a deal, in the grand scheme of things. And the Aussie dollar, when it does fall, moves very quickly, and it's pretty relentless so far. Right, so you saw we came in. It was actually up 150 pips at the start of the Asian session, and we sold yesterday at 149.50, and then the stream was about 149, and it was up 150 pips. I had my stop to break even after the RBA governor spoke, just taken out relatively quickly. So this is a 200 point rally in the Asian session to the start of the European session. That's pretty aggressive. Big moves for the Australian dollar today. Aussie Kiwi is back towards the start of the buy zone. No need to buy yet. No need to buy when something's getting hit pretty hard. I mean, it's going to be hard for the Aussie to recover from this. I think the damage has been done sentiment-wise and technically. So we're probably going to see a little bit more of a clean out now. And so you can't really go looking to buy Aussie against anything if it's going to be the weakest currency for the next few days. But eventually, the Aussie Kiwi is not a bad way to play it. We do have good news from New Zealand though, if the Conservatives win over the weekend, so that could allow this to go even further lower on Monday, and that's probably about the time that you might be looking at buying if it gets down to 107, 107.50. That's much better risk reward. So you're seeing this reversal here, one of the sharpest reversals. But we've seen this before. If you've traded Aussie for a few years, you've seen this sort of moves, and it rarely just stops, right? It's gonna get pretty ugly, I think, here to the downside. While I don't think it's the medium-term view of where the Australian dollar is going, it's doing this without any major negative news. There was some 5% falls in iron ore or something today from China, but that thing moves around a lot. Would have to fall like 20-30% to really get the bears focusing on that particular issue. But just be very careful if you're buying Aussie against anything at the moment, because it's got that feel about it, similar to how sometimes the Kiwi gets when it gets shaken. The Aussie yen as well hit 90, and reversing off 90 is a pretty normal sort of feel for this pair. If you've traded Aussie yen, you know that 90 has been a big level in the past where it's found support and bounced off. And so it's by no means like a surprise here that we've, he's hit that target as well. So, I don't know even if Aussie yen is safe in the current market. It's you might want to wait for a pullback towards 88, 88.50. That becomes a pretty good risk reward down there. Gold broke the 1300 level. Now, gold had been grinding higher, pretty well established here. Now the 1300 level breaking probably does open up further downside, sharp downside in the short term. That's also not helping commodity currencies or the Aussie dollar, which is probably the closest aligned out there to the to gold. And in regards to where the Euro Aussie is going to stop, Jenny's asking. 155, 154. I mean, it can go a lot higher than where we are. These previous, sharp rallies. I mean, this hasn't even started. This is not even a sharp rally. This is with stocks not even falling. If stocks also fall, say the tax plan that's coming out next week is weak and doesn't look like it's going to pass, and risk turns off, there'll be another reason to sell the Aussie. So. Yeah, I'm pretty worried here about how high it's going to go in terms of in the short term anyway. And the trade, eventually is that the RBA will move earlier than is currently priced in, but that could be months away. So we're not really in focus on that right now. And if you're looking at trades which are becoming more dangerous, the whole Kiwi is going to be fine after the Conservatives win trade as well. That could just be another little false rally. So if we next Monday see a pop higher but then a reversal lower afterwards, that's the danger sign that the Kiwis turned. Dollar CAD, another commodity currency, has been damaged a little bit by Bank of Canada speaker here, but now damaged again by the Fed. It's probably on the way to 125 at least. If it gets, we'll have a look at it up there. But you got to stand out of the way here of these pairs, because it can get pretty brutal when the whole market turns. Now, is that playing through on the pound? Not so much just yet, but it easily could. And the strongest pair all of a sudden, or the pair which is holding up better than most, is the euro. So that makes the euro pound selling dangerous. Euro yen's still well supported, but if stocks fall, then this can reverse. And dollar yen maybe we have to look back to buy on the dips now. Where did it get to this afternoon? Okay. So US yields, they start to rally as well. Now, it didn't get past the key level, which is 2.3%. But markets changed very dramatically in the last 24 hours. From the last update I gave you guys to now, wow, some trades have just completely been destroyed. Alright, so it didn't get past 2.3. I think I had a little test of it, but that's the key level we have to get back above. If we can get it back above that, then the US dollar will have legs. And in the short term, even the euro will fall in that regards. Probably looking forward, the next big thing in the market is going to be this speech from May on Friday. Draghi is speaking a little bit, but we already know his jaw-burning attempts in the past haven't been so great, so I'm not really looking forward to the euro falling off a cliff with Draghi, unless he speculates on October being too early for the taper plans. He opens up that door, rather than a source releasing it. If he opens up that door, then you've got a really big potential clean out for the euro as well, and that would coincide with the Aussie and the pound. and pretty much the whole US dollar recovery. So if you're looking at the US dollar index, this is probably even a better way of playing. In fact, I'm going to buy a little bit of dollar index now. Yeah, that should do. In terms of targets, I mean, you can get pretty ambitious here. Market hasn't had a reversal for a while. We'll start there. If it looks like it's going to get bigger, then we'll let it run. But yeah, the game's changed pretty quickly, guys. So many pairs are broken technically that you think ones that are holding up, like the euro and the pound, are probably going to be dragged low as well. And it's just a matter of time. And once they go, then that reinforces a bit of a cycle, and that cycle can continue for days. So the market's finally getting caught. Or it's the beginning of a potential trend change. So where's the euro levels? Just down. If we could break below that, then you'd be targeting the 117. 116.20 shouldn't get touched, but we'll see. I'll be looking at the lower 117 levels as a potential buy zone. Now, my default view is that any sort of US dollar rally will be semi-short-lived. So I don't expect a full back to US dollar rally trend at all. I just expect range trading. We're just going to etch out now the downside. So that's the next part of this. If we're going to range trade, you need to find the bottom end. And so we know where the dollar yen's top side is. The dollar yen top side is around about 114. And so if that level once again holds, then that would be probably about the same time that the euro is down towards that 117-ish level. Maybe Aussie will be about 78, 70, 750, and you could use that previous resistance that the Aussie held for multiple years. It's going to be pretty hard to break. So yeah, we've got multiple levels to be looking to buy from. In terms of getting involved with the US dollar rally, yeah, you could do that for sure. I'm buying dollar index just because it's a bit cleaner, a little less, I don't know. Every pair is a little complicated, right? But it's just, if you think US dollar is going to do well, you can sort of just buy one thing and it should be okay. Now, this tax plan, because I'm not streaming tomorrow. This tax plan is part of. There's two things happening politically in the US. There's a healthcare repeal bill which may pass, and there's the tax plan which should be released over the weekend and on Monday, early next week. Now, the tax plan is big because the corporate taxes, the levels that you set it at, determine whether it can get passed or not, and also what the stock market's reaction is. And that's the danger here. The stocks are just being relentlessly rallying, and if you short circuit the stocks, all of a sudden you've got risk off in the market as well, and that risk off in the market can produce more selling in certain pairs, and make it a little bit complicated for other pairs like the dollar yen. It will become a bit harder if we do see a correction. It'll be dragged lower, which means that the big rallies that we've seen in the euro yen, Aussie yen and pound yen are in danger. So this rally here is in danger if dollar yen reverses, and if the pound starts to creep lower first just because of the pound weakness. Then if the tax plan disappoints and you start to see stock market weakness, it's been very hard to call stock markets down though, so let's not get crazy here. It's just that a lot of people are looking at the stocks now and saying this is a little bit too much too quickly. I've bought VIX, which is related to downside puts in the S&P, and the VIX is a really good product to buy right now, I believe, guys. So if you have the ability to buy the VIX, do some research on it. Maybe PM me and I'll send you some research on it. But it's at near record lows, and it doesn't take much at all to make a lot of money in the VIX if we get some volatility. But yeah, let's be careful here. I mean, you could even sell pound right now almost, right? Sell pound and sell the euro, expecting them to fold. They're not the craziest trades, but I'm just long dollar index is the way to do it. So let's have a look at a little review. ING, which was looking for a bearish outcome, remember? Let's see what they say about the actual price action. Chasing dollar strength in the Fed will prove unfruitful. Okay. Somewhat erroneous to describe the tone of the FOMC meeting as hawkish. There's 4 rate hikes expected next year still. That's pretty crazy. You know, that's not going to happen. They want to fade this rally. The BOJ came out today. It wasn't really a big event, but it was definitely dovish. So they basically don't think they're going to hit their target. So you know, if they do have a snap election like they're talking about, then you can basically pen in huge, you know, quantitative easing for the, you know, for all of 2018, which supports the view, you know, after any sort of stock market correction, or if we don't get a stock market correction, that the yen's going to be the weakest currency in the market, which will provide us, you know, opportunities to buy, you know, not just dollar yen, but certain yen crosses as well. So they're calling that 114.50 is the big level to look at. With both pound strength and US dollar strength going through, I think cable's more difficult to trade. Yeah, it is a little bit. Preferring to sell here. Targeting 132.65. Yeah, it wasn't like RBA low said anything new, but the market has, you know, in the last couple of weeks, NAB and ANZ have both come out with, you know, increased timelines and increased Aussie targets, and so I think the market, it's all started getting a little bit, you know, in love with the idea of an Aussie rally and a potential Aussie RBA rate hike early next year, and that seems to, you know, be dashed, and it's just, you know, the market has been long for so long that a clean out is almost healthy for it at the moment. Like I'm still going to be buying at 78, 77.50 for sure, unless the stock markets crash or North Korea does something crazy. You know, you don't want to miss out the 2008 trade, which is the 2018 trade, which is going to be long Kiwi, long Aussie, probably short dollar CAD too. I mean, yeah, the US dollar rallies, right, are always, the US dollar's in the end of its rally. It's a pushback, but it might be a month's pushback or 2 months pushback. The rest of the world is coming back to raising rates as well, and that's always the biggest thing. You know, the US rate hikes are sort of priced in a little bit, well, not all of them obviously, but the big change will be when the other central banks change. Now, in terms of smaller data tonight, there's a couple of things out, but I'm not in any mood to trade this market right now. This is some pretty wacky, wild stuff. In 2 hours, Draghi speaks. Probably not going to be the main speech which gets the market moving. The speech tomorrow might be a little bit more on topic. This the one tonight is on systemic risk, so I doubt, unless he wants to make a sort of talk on it. It's a good time, if you talk about central bankers having timing with the when they sort of jawbone, this is a perfect time for Draghi to jawbone aggressively. The market is technically vulnerable, and that's the best time. And you've seen, central banks around the world take advantage of that sort of situation before. So maybe, that increases the chance that one of the two speeches coming up from Draghi, that he will try and push it, below some of these key levels. Yeah, gold's giving you plenty of action there, isn't it, Jenny? Yeah, I mean, I don't know. I think we could have a big pullback into 1280, but let's see. It all depends on this tax plan. You can imagine if the tax plan's like reasonable and has a chance of passing, or if the healthcare bill passes, that US dollar's got legs next week. It's going to be a pretty big US dollar move. And if the tax plan's good, stocks are going to continue higher. And that's a really bad scenario for gold. Really bad scenario for any sort of the pair against the US dollar, actually. So yeah, it's not I mean, looking for US dollar strength is not crazy here, but let's not get carried away after it does have a couple of weeks of strength, because it's it is already had its day in the sun. Alright, so let's have a look here. Republicans have promised their blueprint in May. Healthcare. So this is really where the US dollar can get the next leg higher. Don't think for a second that this US dollar rally is sort of just hinges upon the yields rising and the market getting more hawkish for December. That's not, you know, the big risk. The big risk is a solid tax plan. That's where you're going to get that big rally. Alright, so I'm just going to play via dollar index because I don't want to pick and choose which pair to sell here. Come Monday, we're going to have a lot more information. You know, perhaps if Draghi jawbones at some point in his next two speeches, or if the tax plan is doable, or if the healthcare plan looks like it's going to pass, that changes the dynamic. Also, you know, what happens here with the stock market as it sort of gets that feverish level is pretty important too. So I do think we are in the middle of a storm here in the market in terms of volatility. I think it's going to get more aggressive. The Asian session today is probably the most aggressive Asian session I've seen without a North Korean missile strike or something, right? That was, you know, fairly sharp selling coming through. So we have a lot to look forward to next week. But you know, these sort of environments, especially if a lot of it's going to be happening in the US session, and you're trading in the Asian session, or you're, you know, living in the Asian session and you're sleeping during the US session, you want less exposure, not more exposure, because the whole thing can change really quickly, right? Like literally, if the tax plan doesn't look good, then the euro can be above 122, 121 quite quickly. Gold back to 1320, 1340 quite quickly. So it's and you know, the pound on its way to that 140 that we're talking about, you know, when it was in berserk mode last week. So it's there's a fair bit here going on. I'm focused mainly on the Aussie because that's the main thing that my clients trade, and I do suspect that the Aussie's got a big move, well, a much bigger move here to the downside, and after that we can look to pick up the pieces. Alright guys, if there's no pairs you want me to look at, I'll yeah, US unemployment claims don't really give much volatility anymore. But yeah, obviously keep an eye on the Draghi speeches if you're going to be awake. Alright guys, we'll be back on Monday at the same time. Trade safe here. Monday there's also the reaction to 2 parliamentary elections, German elections and Kiwi elections. So if you're trading Kiwi or the Euro over the weekend, just be wary of that. If the Labour Party wins, Labour Green coalition, which is, you know, only 1% behind, 1 or 2% behind, given the latest 2-party preferred sort of situation there, then you're probably looking at 100 to 200 pip drop in the Kiwi on the Monday morning. So you know, that's a big danger here. It's going to be very hard to hold exposure over the weekend there. Alright guys, best of luck.